Hi there, Dan Page, Boulder Equity Partners, back with you again. And today I'm going to talk about short-term rentals. And by short-term, I mean Airbnb, VRBO, and some of the other leasing platforms available. So this market remains extremely hot. Short-term rentals continue to gain in momentum, and the consumer demand for them is even higher now than it was pre-pandemic. In fact, it really peaked even during the pandemic. And I can say this from personal experience because whenever I travel with my family, we always stay in a short-term rental. In our case, we prefer the advantages and the comfort of staying in a home rather than staying at a hotel. And as a result, there have been significant increase in revenue from short-term rentals nationwide. So what's interesting is we can really provide streamlined approval and streamlined underwriting for your short-term rentals. So we provide financing for purchase and refinance of short-term rentals. We have a lot of borrowers that are purchasing the first one and others that are pulling cash out of ones they already have so they can buy even more. So our short-term rental programs are tailored for investors. Specifically, we have underwriting that is completely focused and it can result in a quicker close on either your purchase or your refinance. So let's talk about some of the highlights. First off, the short-term rental income is typically significantly higher than traditional market rents. So we're basing our income on that, our debt service coverage ratio and our loan amounts on that short-term rental income, not on market rents. That is a huge differentiator. And there is a nationwide sort of basis, foundation called AirDNA. So if you are a professional investor, which means you own at least one other short-term rental in the subject market, or you own 3 nationwide, and I can use up to 100% of that AirDNA revenue as part of our underwriting criteria for that rental. And even if you're not a professional investor, and this is your first one, I can still use 75% of that rental from short-term DNA as a basis for our loan underwriting. So we have loans all the way down to $150,000 and all the way up to $10 million. So it's quite a range for short-term rentals. And a debt service coverage ratio, which is that algorithm we use in order to determine, what you can qualify for. We can go all the way down to 0.75 for a purchase or rate and term. So let's discuss a moment what that means. So typically, in a regular market rental loan where you're leasing the property, I have to have at least a 1.2 DSCR. What that means is that your net income typically needs to be at least 20% higher than all the expenses involved in your loan payment. But here I can go all the way down to 0.75 for either the purchase or if you're just refinancing and not pulling cash out, or all the way down to a 1.0 if you're doing a cash out. Long way of saying it's a lot more liberal than traditional leasing debt service coverage. And if you already have a property that you've been leasing, I can use 100% of that trailing revenue you've had over the last 12 months for a refinance. And as far as loan to value goes, typically I'm maxing 70-75% for typical regular lease properties, but I can go up to 80% for purchases and 75% for cash out refinance for these short-term rentals. So where do we land? Well, pretty much nationwide, except for a handful of states, about 46 states right now. And we lend for properties in traditional vacation rental towns in most major metro areas nationwide. And right now, you don't even need a short-term rental license to be verified in order for us to put funding together for you. So I encourage you to give us a call. 303-938-8280 is my direct line, or you can email to contact@boulderequitypartners.com. And we'd love to talk to you. We are the experts in the industry. We've been doing this for 30 years. I've closed well over $1 billion in transactions, and I am the go-to guy for thousands of commercial loan brokers. So thank you very much, and I hope to talk to you soon.